CEKD, the next IPO slated to debut on the 29th of September 2021. What is this new IPO about? Is it worth your money? Hi, I'm Frankie. Welcome back to my fuck show, Frankie Answers Questions. Before we move on, I have something exciting to share with you. If you would like to learn more about how to invest in the stock market in a systematic and stress-free way, we are organizing a stock investing bootcamp in collaboration with AmEquities on the 16th to 19th of September. Check out the link in the description below. We can't wait to see you there. Question 1. What does CEKD do? CEKD is a die-cutting solution provider. They manufacture die-cutting molds and the trading of related consumables, tools, and accessories. Die-cutting is a process that uses specialized machines and tools to cut a specific shape out of a material, such as corrugated board, plastics, textiles, and leathers by cutting, forming, and shearing. It is also often used to create custom shapes and designs for label printing. Question 2. Who are CEKD's major customers? Since they are in the die-cutting business, it is not hard to guess that their customers are businesses that manufacture highly standardized products, such as paper-based printing and packaging, plastic packaging, E&E, automotive, textile, and leather products. Based on their prospectus, they disclose two of their top 5 customers, which are Tianhua Press Holdings Berhad and Percetakan Tenaga Sendirian Berhad. Both of them are renowned paper packaging companies that use CEKD's product and services. Tianhua is a listed company on Bursa, Malaysia, which is one of the major suppliers to C-grade box packaging in the Asia-Pacific region. Percetakan Tenaga, on the other hand, is not a listed company, but I'm guessing that it could be a packaging solution provider to Nestle and Sony. Now, let's take a look at their top 5 customers analysis in the prospectus. Customer A and D are their major customers, dominating the top spots in the league, usually giving them business of around 2 to 3 million ringgit, except for FY 2021. Tianhua and Company B had always hogged the next 2 spots, contributing around 1 to 1.5 million ringgit revenue annually. Here's the interesting part. In FY 2021, Tianhua dropped out from the list, which means they are contributing less than 367,000 in revenue to the company. Did they lose Tianhua as a customer totally? Or did Tianhua just cut back on their orders? I don't know. But because of this, I decided to look into Tianhua's finances on Bursa and noticed that their business is quite resilient. So, I'm not here to make any speculation. I pun tak nak cakap banyak. Anyways, CEKD will need to find ways to make up for the lost revenue from other customers moving ahead. Question 3. Tell me more about the company. The company was founded in 1989 as a trading company of consumables, tools, and accessories related to die-cutting molds. At that point in time, Proton Saga was the best-selling car, which helped to transform Malaysia to a strong supply chain in the automotive industry. This created an opportunity for CEKD to supply various types of molds and dies that are used in manufacturing automotive parts and related packaging materials. From a trading company, the company evolved into a manufacturing company, producing molds, tools, and dies in the year 1990. This time, the company focuses on catering for the needs of the textile and leather industries. Since then, CEKD never stopped penetrating into new industries with its core expertise in the die-cutting business. It managed to offer products to capture more customers in the paper printing and packaging and E&E industries. In 2002, CEKD expanded again by investing in machines that allow it to manufacture embossing and debossing tools. A decade later, in 2013, the company relocated to a bigger factory spanning 71,000 square foot in Oakland Road from a 19,000 square feet site located in KL Industrial Park. With 3.7 times bigger floor space, it was able to accommodate its customers' growing demands. Riding on the uptrend of its business expansion, CEKD acquired a company called Hotstar in 2017, which is another die-cutting mold manufacturer to expand their market share in the business. Question 4. How have they been doing so far? Talking about performance, there's no better way to explain than looking straight into the numbers. Judging from the revenue of the company, it has not been growing since FY 2018. However, based on the profit margins, It is a damn good business to be in, with an EBITDA margin of 40% and a profit after tax margin of 23%. The point is, although they are not growing, they are quite comfortable. Anyways, it is important to understand the industry that they are in. According to an independent market research report, in 2019, the market size of the die-cutting tools manufacturing industry was valued at 216 million ringgit. That is not a big market to begin with. In that year itself, CEKD registered a revenue of 28.4 million ringgit, meaning it commands a market share of around 13% at that point. Usually in a small industry like that, one of the most effective ways is to acquire other people's market share. That was exactly what CEKD had done over the years, by acquiring companies like Hotstar and another company called Focus Win in 2017. In fact, that was the impression I got when I first heard of their IPO plan, to raise funds to acquire other companies for market share. Question 5. How is CEKD going to utilize its IPO proceeds? The company plans to raise 24.3 million ringgit in this IPO. Like I said earlier, I thought they would be acquiring other companies with the IPO proceeds to increase their market share in the business. To my surprise, this is not the plan based on my interpretation. Out of the proceeds, 8.8 million ringgit, or 36% of the total proceeds, will be used to acquire a factory to relocate Hotstar from 3 different locations to one single factory. The reason? To save on rental expenses and to make their operation more efficient without having to move things around 3 different places. Second, 4 million ringgit, or 16.5% of the IPO proceeds, will be channeled to pay off bank borrowings, which will save the company around 140,000 ringgit in interest expenses a year. Third, they plan to spend 4.3 million ringgit to purchase new machinery and to upgrade the current computer software and servers. The remaining portion of the money is for some marketing activities, working capital, and listing expenses. As you can see, the main focus of the fund is used to improve margins rather than growing their market share through acquisitions. So maybe there's something that I'm not seeing. Question 6. What are the details of the IPO? At an issue price of 48 cents per share, CEKD is expected to raise 24.3 million ringgit from the IPO as mentioned just now. Upon listing, the market cap of CEKD will stand at 93.4 million ringgit, whereby the original owners of the company will still be holding the majority shares of 74%. If you're interested in subscribing to the IPO, the company will be listed on the ACE market on the 29th of September 2021. Question 7. Is it worth my money? The thing is, I don't know what your investment strategy is, so I'm unable to tell if it is going to be a stock that fits into your portfolio. Having said that, perhaps I could highlight some of the key facts to help you in your decision-making process. As we have mentioned earlier, in a small industry like this, one of the most effective ways to grow the business is by acquiring competitors to increase the market share. We have seen CEKD doing just that in the past. However, I'm not seeing that strategy in this current IPO. It seems to me that they are trying to increase their profitability, but I wonder how much more they can squeeze from this strategy. Based on what I have gathered, by moving into the new location, they will be able to save up 370,000 ringgit in annual rent. On top of that, by paying off a portion of their debt, they will save around 140,000 in interest. That adds up to slightly more than 500,000 ringgit savings a year, which is around 8% of their FY20 profit. Again, this is based on my estimation. Who knows? Maybe with the new machinery and software, the efficiency could contribute to better profits as well. Nonetheless, there's another point that I would like to highlight as well. They have mentioned that the current facility is not enough to house all Hotstar equipment from the 3 different locations despite acquiring the new factory. In fact, they are already scouting for another facility nearby for the matter. This leads me to wonder.
I wonder how, I wonder why.
Isn't this going back to the previous problem where all the facilities are scattered around different locations? Where is the efficiency? Anyways, perhaps the purpose of the IPO is to increase the branding and credibility of CEKD so that they are able to attract new customers going forward. This could be part of the reason, since the company has also allocated a portion of the IPO proceeds for marketing activities. At the end of the day, it is unfair for me to judge the company by just looking at the prospectus. No businessman them will ever want to see their company perish. With that in mind, I could be missing out the real intention behind of the listing exercise. What do you think? That's all we have for today. #fuck.